Okay, thank you, Jeanette. I really appreciate it. So, like Jeanette said, the purpose of this webinar is to see if we can provide a plan for you to get retired in 3 years or less on $9,000 per month, tax-free. So that should sound pretty appealing, and lots of promises and ideas get thrown around. So let's see if we can make this kind of real and realistic, and maybe something that you actually feel like you could do. So just want to introduce myself real quick. My name is Peter Schultz. I'm the founder of cashflowheaven.com and thewinningsecret.com, and both of those websites are dedicated to increasing your monthly cash flow. And there's a lot of services out there, investing services, that want to show you how to make $1 million overnight. I love that idea. I think that's a really cool idea, but I think what most of us need is another maybe $1,000 coming in every month, or maybe two, or in this case, maybe 9. So let's take a look. So there's 3 key elements you're going to need to retire comfortably in 3 years or less. And the first one is safety. So this is sacred money. This is your retirement money. You cannot lose it. Yeah, you can have little ups and downs, but you can't have massive losses. I mean, that just doesn't work. And if you've traded or invested over a period of time, I'm sure you've had the opportunity to lose some money, and I know I have, and it's sobering. Kind of makes you stop and think, and it really forces you to go back to the drawing board and kind of see what you're doing wrong. So the second thing is you're probably going to need better market returns if you don't have a whole lot of years to invest at this point. So I love it when I read these things that say, hey, if you invest, $2,000 a year at the age of, 20 years old or whatever, by the time you're 65, you're going to have all this money. Just nobody. The only problem with that is nobody does that. I mean, life comes along, and take a look at yourself, take a look at all of your friends. There's divorces, people get sick, people get laid off. There's a lot of ups and downs in life. And so very few of us have this perfect little retirement plan figured out. So if you don't have, 40 or 50 years to let compounding work for you, we're going to have to compress some time, and we're going to have to get better than market returns. Now, statistically, I think the S&P 500 has gotten something like 11% per year over the last 30 years, and that's actually a pretty decent return. We live in a pretty prosperous country. We'll have an average of 8 years of economic expansion versus maybe 2-year recession every 10 years. That's pretty good. Things, we're not on the downhill slant, we're on the uphill slant. So we have a good environment, but we still need to do better than the market does as a whole. And then the third thing is what if you could get a tax-free buildup and payout? And remember, the only money that matters is the money you get to keep. So let's get into it here. So let's talk about safety. So how do we know this strategy is safe? So with all the investments you've done in your life up until now, did you ever get an exact percentage probability that they would work out? So how do you know an investment is safe? So, I've got some real estate. I've got some rental real estate, and it's been good. And when I was talking to the real estate agent, I didn't even think to ask, what is my percentage probability that this investment is going to do well? Because, how are they supposed to know? Or if you go into your investment advisor and they say, well, yeah, I've got some mutual funds for you. There's a couple of ETFs. There's this bond fund we can put you in. And if you ask them, well, what's my percentage probability that is going to do well? They're just going to give you this blank look, and they're just going to go say, well, historically it's done pretty well, but, nobody can guarantee anything. And that's absolutely true. But if we're talking about a retirement plan, I mean, you are really wanting to get free. You really want to get liberated here. Wouldn't it be nice to know what your probability of winning is? So the advantage of this particular strategy is it's based on a mathematical formula. And for those of you that are options traders, you probably recognize the term the Black-Scholes formula. And that was a Nobel Prize winning formula. And it won the Nobel Prize in 1997 for the mathematicians that invented it. But they actually came up with it back in 1973. And not coincidentally, that is when the options market was formed as we know it. back in 1973. Before that, there were options, but they were actually published in the newspaper. I mean, I can't imagine being an investor in the 1920s, you know, I mean, how crazy it was. So they'd publish an option. It might be good that, you know, the next day, it might not be good the next day. You know, the whole industry was rife with fraud, which is why we have so many rules and regulations today. So this formula, this mathematical formula actually made the modern options market possible in 1973. All they had, I think, at first was calls, and then they added puts about 10 years later. And we kind of take it for granted today, but gosh, you know, what a financial innovation. So there's something in this mathematical formula that can really seriously stack the deck in your favor, like massively stack the deck in your favor. And the good news is you don't need to know how to work this formula. You don't need to know what any of these symbols mean. You don't be able to have to solve the equation to make a lot of money using this formula. And I always equate it to, you don't have to know all the complicated workings of the internal combustion engine to drive your car to the bank. It's the same kind of thing. If we just know a couple little things, we can do pretty darn well in the market. So let's just take a look at a trade, and let's take a look at what we're actually doing here. And I'm going to take my little red pen here. And so what we're going to do is, first of all, we identify a stock that's going in a certain direction. So this one's obviously headed down. And it actually has, this happens to be Tesla. This is fairly recent, and it's got some pretty well-defined resistance. So all you technical traders out there, you know that the kind of the ceiling of the stock is resistance and the floor is support. So what we want to do is we want to sell an option that is never going to get touched by the stock. So we sell this option right here. It's above this overhead resistance, downtrending stock. One of the things I love about options is they always have a finish line. We sell about 10 days of calendar time. Take out 2 days for the weekend. It's about 8 days of trading time. And we sell this option and we buy the next option above it. In this case, this is a $2.50 spread. We sell this one, we take in a credit, we buy this one for protection. It costs less, so it creates a net credit in our account. And right off the bat, our only risk is right here, this distance between the spreads. So for you super sophisticated traders out there that have been around and you know what's happening, you know that this is a credit spread. And you're going to say, Peter, are you just going to show me a whole webinar on credit spreads? Because, you know, I know about credit spreads and I've done credit spreads. And if you're going to talk about credit spreads, I'm just going to be bored out of my mind. Well, just bear with me just a little bit, because you might learn some things that you don't know. Like all things, you know, if you really get into it and you really get into the depths of something, you find, oh my gosh, you know, that's interesting. I didn't know that before. And so what we're going to do is we're going to use credit spreads as a tool to get what we want. And what we want is a pretty substantial income that comes in every month without us having to do too much work. So that's what we're doing. And you can kind of tell that, you know, that's the underlying is probably not going to suddenly just jump up there and touch that. Keep in mind the stock is down here. When we did this spread, it had a big down day, so the stock's down here and we're selling way up here. Okay, so how do we know what our probability of winning is? Well, this is the Thinkorswim platform. This is kind of the preferred platform for most options traders I know. I absolutely love it. It's great. They put zillions of dollars into this platform. We all get it for free just for opening an account. But up here at Layout, if you happen to have a Thinkorswim account right now, if you're curious about it, up here at the top it says Layout. And there's a little bit of an arrow right down here, and you click on that arrow, and what it can do is it changes your headings on your columns. And so this particular one that I recommend clicking for credit spreads is you get implied volatility, you get the probability of the option being out of the money, so in other words, worthless at expiration. And you get the delta, and delta, of course, is just the rate of change in the option for a given dollar move in the stock or the index. So in this particular case, with Tesla, we're selling on this particular trade. This is a real trade. This is one I recommended. And we're selling the two, you can see it right down here in the lower right-hand corner, the 265 calls. We're buying the 267.50 calls to hedge. That's a $2.50 spread. And we go down here and we take a look at this column because we set up our columns this way. So this is probability out of the money. Another way of saying probability of winning on this trade. And our probability of being out of the money is 82.71%. So you have an 82.71% probability or potential of winning on this trade according to the math, according to this Nobel Prize winning formula. So that's it. You're looking at, that's your probability of winning. So I have a question for you. If a friend of yours said, hey, I've got this coin and we're going to toss it, we're going to go in the backyard and we're going to flip this coin, and the coin is weighted 82.71% probability of being heads. And you get to call heads every time. And by the way, every time the coin comes up heads in your favor, I'm going to hand you $1,000. And you start flipping that coin. Now, you still have like a 17-point-something% chance of you losing, but you got an overwhelming chance of winning. So my question is how long would you stand out there in the backyard and flip that coin? And my suggestion is you'd probably flip the coin until it was so dark you couldn't even see outside anymore. Because most of the time you're going to get $1,000. And even if you have to give up $1,000 on the times that you lose, you know that you're going to make it back over time because the probabilities are so stacked in your favor. And that's really the concept that I want to get here, is if the probabilities are massively stacked in your favor, you are going to win over time. It's just how the math works. And I also want to point something else out. Almost everybody that trades options, the vast majority of people that trade options, are on the opposite side of this trade. They buy options because they're chart readers, and they do their fundamentals and they do their research, and they go, I can buy this option, and if it goes in my favor, I'm just going to make an absolute fortune. And that's true. A lot of the options buyers, they like to brag about doubling their money, tripling their money, all these fantastic things. What they don't tell you is most of the time they lose. In fact, about 80 to 85% of the time they lose. And most of the time, especially if they don't have fantastic money management, they wipe out their accounts. So I want the opposite for you. I want your account to continue to grow. And the easiest way to do that is have the probabilities massively stacked in your favor. So let's just take a look at this again. So we have this 82.71% chance of winning, and that's simply all the software knows, all the Black-Scholes formula knows is this arrow down here is where the stock is, and right up here is where you sold your option, and there's this amount of time for something to happen. And then the formula also takes in the volatility of this stock. You can see it's got a certain range. How much does it jump up and down? And it takes all of that into consideration, and it comes up with this probability right here. But can we improve that? And I would suggest that we can, because the formula does not take into consideration market direction. So what's the overall market doing? So at this particular time we put this trade on, the market was also going down. So Tesla was going down, the market was going down. Those are very powerful forces working in your favor. The formula does not take into consideration trend. Now, you don't have to be a super sophisticated technical analyst, and you don't have to have super sophisticated software to take a look at this stock and say, oh my goodness, yes, it's going down, it's heading lower. This formula also doesn't take into consideration fundamentals. What's going on with Tesla? Are they losing money? Are they making money? What did their last earnings report say? Is Elon Musk in trouble with the SEC? Has he just put his foot in his mouth again? Is he doing some crazy things? All of those can actually help improve your chances. So just from a mathematical standpoint, we're starting off with a pretty high probability of winning. But my goodness, what if we had all these other things going for us? Could you actually improve your probability even more? So by the time we stack all the factors on your side, you can expect to win on 8 out of 10 trades, whether you watch your trades or not. Now, this is a pretty darn important point because I got into trading so that I could actually have a better lifestyle, not a worse lifestyle. In fact, in many cases, you're better off if you don't watch your trades, because a lot of the time when people watch their trades, they get worried, they freak out, they get too involved in it, and they just can't help themselves, and they end up getting out of a trade they shouldn't, or they get into a trade that they shouldn't, and they kind of end up screwing their account up a little bit. So what I like about this is if you just put on, all you have to do is put on the trade, The minute you get filled, put in the kind of stop that I'm going to show you, and that's an automatic stop that's good for the entire life of the trade, and you walk away. And so what I love about this strategy and the way that it's worked out in my life is that it's not just a great cash flow strategy, but it's a great lifestyle strategy as well. You can get on airplanes, you can travel around, you can be offline, where you're not having to watch your trades every single minute of the day. This is a really, really good, this is something that you could do in retirement. I mean, this is something that you can do right now if you're working full-time, if you have a family, if you're really busy. You don't have to be Johnny on the spot with your mouse. You don't have to be perfect. And that's really nice. So for the trades that don't work out, we've got a proven strategy, and I just alluded to that a second ago, for cutting any losses in half, so you can easily make back the money that you lose on any losing trades, plus some more on usually the next 2 trades. So this is a strategy that gives you a mathematical expectation of winning, and that's all you need to make money over time. And that's exactly what you want for realistic retirement plans. So this first thing, safety, I really wanted to cover that pretty carefully, because it really is, it's the safest strategy I've ever seen, including just owning stocks. People talk about buying blue chips and forgetting about it. That might work over 20 or 30 years, but stocks can go down, as we've seen. So imagine if you could combine the best part of a business with the best part of investing. So the best part of a business is consistent weekly cash flow. That's why people show up. That's why they open the door. They sweep the floors. They, stock the inventory. They advertise. They want that cash flow. That's what allows them to live a good life and have that money coming in every week and every month. The best part of investing is it's passive. It doesn't take much of your time, and that's really nice. Well, what if we could combine those two? So this strategy combines both. It does something pretty remarkable. And it's your secret to retiring cash rich in 3 years or less. And what it does is it creates returns every week. So you can essentially turn every week, every Friday into a payday. So when it comes to investing, most people think in terms of annual returns. That's how we're taught to think. But if you change your thinking to creating weekly returns, the compounding effect can literally make you rich. Plus, it's a lot of fun to see this money come in every single week. So back in 2012, the Options Clearing Corporation started experimenting with weekly options expirations instead of the traditional monthly expirations, with just a handful of really active stocks like Apple and Google. But now years later, there are over 430 stocks with weekly options expirations, plus a whole bunch of indices like the S&P 500. So this is a monumental change, and it now means you can make a whole series of weekly and create a series of weekly paychecks, which is what my entire subscription service is dedicated towards. I put this whole thing together, put a ton of research into it, and spend a lot of time so you don't have to. And I just hand you 2 trades a week on a silver platter that have a really, really high probability of expiring worthless. And they also create, a lot of income, a lot of money coming in, and on a really regular basis. So if you just start thinking in terms of weekly returns instead of yearly, you'll dramatically increase your returns, even if your weekly returns are modest, because there's so many of them. There's 52 weeks in a year. And if you combine those returns, you'll be shocked at what it can add up to, which we're going to take a look at in a moment. But for now, let's take a look at the third pillar of our plan. So that's a tax-free buildup and payout. Remember, the only money that matters is the money that you get to keep. So if you've ever paid a lot of taxes in your life, this part should be extremely appealing. Now, the thing about taxes are really interesting. The people that don't care about taxes and think everybody, the government should raise taxes, are people that haven't paid too many. So I raised 3 kids, wonderful kids, and it was really fun to watch them grow up. And if you're a parent, you kind of know what I'm talking about. And it was really fun to watch them get their first jobs as teenagers. Because when they got their first paychecks, they were getting a certain hourly wage, and they knew how many hours they had worked that week, and they were really excited to see this check, and they already had it figured out and calculated in their mind how much money they were going to make. And then they look at their check and they go, oh my gosh, what happened to my check? All these taxes were taken out. And that's shocking for a young person that doesn't make very much money. So if you've made pretty good money in your life and you've done well and you've been successful, you know what a bite taxes take out of your income. So this part is really compelling from that standpoint, but it's also compelling from a mathematical standpoint. So if you can keep more of the money that you make, and you can build it up, and when it gets paid out to you, you don't have to pay any taxes on it. That's just huge. The increase is exponentially larger because for most of us, taxes are literally the biggest expense in our lives. For a lot of us, it's more than the mortgage payment. In fact, a big part of the mortgage payment is property tax. So taxes are a pretty big load. So in the Taxpayer Relief Act of 1997, Congress gave us a great gift I believe every American should take advantage of. And this is just huge. I don't know why they did this. This is so ungovernment-like for them to provide this kind of an opportunity for us. But gosh, if you're not taking advantage of this, I really, really encourage you to do it. So, and that gift is the Roth IRA. So a Roth is incredible. Now, maybe you already have a Roth. Maybe you already know about Roths. Maybe you don't have a Roth. But let me just clarify a couple of things and remind you how cool Roth IRAs are, especially to trade a cash flow strategy inside of. And by the way, our favorite broker for this strategy will allow you to trade this strategy right here inside of your Roth. You just got to fill out the forms the right way, and we're happy to show you how to do that. So here's what's so cool about a Roth. With a Roth, you put in after-tax money into your trading account, just like you would with any account. Any money that you have in your account is obviously after tax. And so that's what we always open our accounts with. But here's the kicker. With a Roth, any money you make is yours to keep. You don't have to pay taxes on the buildup. And when you're making weekly or monthly profits, or cash flow and profits that are coming in every week, get out a calculator. This just makes a gigantic difference. So that means both the buildup and the eventual payout is completely tax-free at both the federal and state levels. This is an incredible advantage. So of course there's some rules, but they're not that bad. So you can contribute up to $6,000 per year or $7,000 if you're over age 50. Most of the people that I know that are really concerned about retirement are over age 50. So they just increased these recently. So $7,000 a year is a decent amount of money, especially when you're really wringing the most out of it with a strategy like this one. So you can contribute to a Roth if you make up to $137,000 a year for a single filer and $203,000 a year for married couples filing jointly. And these figures are up just recently. So, that's your net income. That's after all your deductions. That's after deducting your mortgage and your business expenses, everything. So, those are actually pretty substantial incomes. So most of us can participate. You can contribute anytime during the tax year right up until April 15th of the following year. So if you didn't get around to, making a contribution for the entire calendar year, you got another 3 months or so, to 3.5 months to contribute the following year. So you can get that money in there. If you have the account open for at least 5 years, you can start taking contributions as early as 59.5. And so, 59.5 isn't that old anymore. I got friends that are 59.5 that run marathons, that really have really active lifestyles. They're running around, they're still working, they're still really vibrant. That's not old by today's standards. And you can start taking that money out. But unlike a regular IRA, you don't have to take the money out. So with a regular IRA, the government forces you to take the money at a certain age because they can't hardly wait to tax that money. So they make you take it. Well, with the Roth, if you're 59.5 and you want to keep working and you're doing really good and you want to let this thing build up for another 5 years, you can. The government doesn't say anything about it, which is really, really cool. So the Roth just has all these just amazing advantages. In fact, it's got such incredible advantages that I know people like myself that took the regular IRA and converted it to a Roth. And of course, you have to pay the taxes on that money when you do that, when you make the conversion. But to me, it's totally worth it. I just don't want the government to get their meat hooks on any profits that I make. And, this is one of the few super legal, ways to protect that income. And it's blessed by Congress. This is the law that they passed. I don't think it's going to go away. So let's put it all together and see what we've got. So this is the safest strategy I've ever seen. And we breezed over that pretty quickly, but I hope you saw that. You can actually pinpoint your probability of winning. You've got weekly income that can compound into some pretty astonishing returns. And you've got a strategy that's perfect for a Roth IRA where you have both a tax-free buildup and a payout. So pretty exciting. So let's see what that translates into in the real world. I mean, all this theory is really cool. It's really exciting to think about, but let's see where the rubber meets the road. So let me show you some typical trades taken right from my weekly trading letter, The Winning Secret. Now, I didn't cherry pick these. This is just like the last 6 trades. This is just really typical, and I could probably do this in any time period during the year. So what you're seeing here is just a sample of what the letter looks like. I give you a lot of great information. There's charts in there. We identify market direction. We identify turning points. I tell you everything to do, exactly what to sell. I tell you where to put your stop. I mean, it might take you 10 minutes to read this once a week. It might take you 5 minutes to enter your trades. That's your time commitment. And I put hours into this, but I got to tell you, I love doing it. I love doing the research. This is the funnest thing in the world. Been doing this for like 20 years. It's great. Never want to retire. This is fun. So here's an example of a Condor that we did. Now, a Condor is simply 2 credit spreads. So we sell up here, we sell this call, we buy this call to hedge, we sell this put, we buy this put to hedge. We actually bring in some decent money on both sides. The idea is, we've got a certain pattern here on the SPX. The idea is that it's going to just keep doing this and going up and down. But if it crosses over this finish line right here, in between what I refer to as the goalposts, you make the money on both sides. Pretty slick. So this one we did an 8-day 25% profit. This is an actual trade that we completed, and pretty darn good for 8 days. Keep in mind we only had 6 days of actual market exposure because we got a weekend in there, and that's kind of free time decay. So that's pretty cool. So here's a put spread that we did on Bed Bath & Beyond. So here's the thing. Most of the time we like these to go to the finish line, so they just expire worthless. You don't have to pay any commission or whatever. The trade just goes away and you keep all the money. But what happened here is, BBBY technically here formed a little launching pad. I call that a launching pad for a rocket taking off, and that's exactly what happened. And technically this is just really good, and technically this thing should have just kept on going. So when it took off right here, when it first took off, we go, oh yeah, this is fantastic. This is what we're looking for. And so we sold this put, we bought this put to hedge. Great, everything's going great, except boom, right here, the whole thing goes down. That scared me. So I put out a little alert, and I've got text alerts. You can get them right on your phone, and you can actually even trade on your phone. So you get the alert 30 seconds later, click a couple of buttons, and you're out of the trade. It's pretty darn cool. So we weren't in this for the full thing. We were just in this for 2 days. But look, just in 2 days, we made a 10% profit. There was some time decay. The thing bounced after it went down. So, I mean, it was a little bit in our favor on the chart as far as pricing goes. Plus, we had a little bit of time decay. Boom, we're out at a 10% profit. This is one that we shut down early. So you don't have to wait for the whole time. If you don't like something, if you're, getting a little nervous about the direction this thing is going, just close it out. Chances are you'll make a profit. This is Spotify. A lot of you might listen to Spotify. They're a streaming music service. They're actually really cool. But they're starting to get some competition from Apple Music. They're starting to get some competition from Amazon, from Google. And they've got this downtrend going, which is a little disconcerting. We've got, resistance here. So we sold this call, we bought this call, and it expired 10 days later for 26% profit. And you're starting to see a pattern here. This is kind of what we're targeting, is about 25%. Sometimes we get 20%, but I like to get on these trades, 10 days at a time is a little bit longer than a week. It's a little bit less time than 2 weeks. You can easily turn your money with 10-day plays twice a month. And boy, that's all you need to get some pretty outrageous compounding. But, this is what we're shooting for, around 25, 26%. This is on the SPX. This is a put spread here. We have this kind of a uniform when we did this trade. SPX has rolled over a little bit now, but it had this really uniform uptrend. We saw it dip down here, and then it started going back up again. That was our signal to sell a put spread. Pretty easy expiration. It just went right on up. Never was threatened. We got a 10-day 20% profit. These are really typical. Here's another one on Tesla. The thing just fell out of bed. Elon Musk said something terrible that he shouldn't. Up here, you can see my comments. Tesla's been in an overall downtrend since December, but really dropped after Musk announced the news last week. As you can see from the chart, the stock has further to fall, and with all the bad news, a rebound may be slow in coming. Really safe trade, 10-day, 25% profit. You're probably starting to see a little pattern here. Okay, this is Salesforce. Here's my comments. I mean, look at this trend. I mean, it's got a really nice trend, and then it got super uniform right here. Typical example of why we want to sell puts here, we want to buy calls here. Here's the comment, CRM is clearly in an uptrend with buyers rushing in to buy the dip after earnings. This stock will likely continue to all-time highs. However, if you're a trader, you know things always don't work out in your favor. There's random things that come along, maybe CRM made a sudden news announcement, or maybe an analyst said they don't like the stock, whatever. Look what happened. It just fell through here, fell really, really quick. Our last ditch stop, we can also put stops here at support, which isn't such a bad idea, but our last ditch stop is right here at our sold strike. So we got out right here when it got touched, and we got stopped out. But look, there was only 2 days left. So from the time we got in this trade, there was time decay. And time decay works for you every single day, whether the trade goes against you or it goes forward for you. So it was pretty cool. On this one, we just lost 23%. In this case, we would make it up on the very next trade. But usually, we actually lose a little bit more. We usually, if there's a little bit more time on this thing, we might lose around 40%. But keep in mind, we're targeting 25% per trade, and you're winning on an 8 out of 10 of them. So you can just see statistically, you're just going to win most of the time. And it only takes 2 trades to get back in the profit category after losing on one. And the reason is we don't let the stock go all the way through our spread. That would be devastating. We stop out early. We go, hey, the whole premise we were basing this thing on is that CRM is going up, broke its downtrend going down. Let's just not wait to see how bad this thing gets. Let's get out. Let's get out now. And that's what we did. And we had a really reasonable loss. It's totally easy to make up. So the point of this, and I took these all, and this is how many we lost out of that many trades. We lost out of 1 out of 6 trades or whatever it was. But the reason I wanted to show you a losing trade is to show you that losses are nothing to be afraid of. They come along. If you're a trader, they happen. The best thing that you can do with losses is have a really good plan to manage them, so that statistically how many you're liable to get over time, and B is what happens when you do have a loss. And so we've got a really good plan here, a really good program that's proven out over time. You just win on more than you lose, and you end up making money. So let's take a reality check here. So as you can see, we typically target a 20-25% return with over an 80% chance of winning. But here's the thing. What I want to give you an idea of is what's a realistic amount of money that you can make every month. So the thing is we hold back about 40% of our account for buybacks and rollouts. Now, this is pretty conservative. You can probably just keep 30% in there if you want to, but I tell people 40. And what that is when you close out a trade, it takes money to close it out, like we just did on CRM there. And so you want to have a little bit of cash sitting around your account to do that. Sometimes we want to roll it out, like we want to close that trade and roll out to a better trade with a higher probability of winning and take in another credit. Well, that takes a little bit of margin. It takes a little bit of money. So I like you to have a little bit of cash. So I never recommend trading with 100% of your account. You want to hold a little bit back. And as you've seen, we don't always win. So what can you expect? I want to give you a realistic idea here of what you can really do. And that's even if you've never done this before, because I make it really, really simple, as you've seen. So we're making trades every week, so you're usually bringing in returns every Friday. So, because we overlap them. So even if you just got 12.5%, half of what we target, well, 12.5% times 4 is 50% per month. Pretty outrageous. Wouldn't it be nice if we could do that? It's unrealistic. Because of buybacks and losses, that's too rich. It's too much. Let's say it's just half of that. So we really are targeting 25% every 2 weeks. So what if we got half of that? What if we got 25% per month? Is that realistic? Well, that would be, except we have losses once in a while, and you have to factor those in, and we don't use our entire account. So a certain amount of your money is just sitting there, not getting anything, ready to help trades that are going against you. So let's cut that down again. Now, personally, I think you can do an easy 10% per month, and we've done better. That's very realistic. But I want to cut it down even further because I know if you do better than what I say, you'll be happy. And if you do worse than what I say, you'll be sad. So I'm going to cut this all the way down to 7% per month. Now, keep in mind, we're targeting 25% every 2 weeks. So you got to have a lot of bad things happen to just get 7% a month. But I'm confident that even in the crazy market environment that we're always in, there's always a crash, or the Federal Reserve says something they're supposed to, or the president says something, or China does something. There's always something going on with the markets, and they usually are, sometimes do things that we just really don't expect. So I want to get your expectations really, really low here. And let's say that all you can manage is a fraction of what we get. So we're targeting 20 to 25% every 2 weeks. Let's say we're getting a third of that, which is 7%, and let's say it's not every 2 weeks, it's a month, so we're even cutting it in half again. So all you can do is 7% per month. What does that translate into? So that's just 3.5% every 2 weeks, about 1/7 of what we're targeting. And by the way, I know if you follow my directions, you will likely do better, but let's just stick with the 7% figure. If you do that consistently, what does that turn into? So let's say all you can do is 7%, and if you open a Roth today, say you don't have any retirement savings, but you do have an extra $7,000 you can get your hands on. If you open a Roth today and put $7,000 in it and add $7,000 per year, so for 3 years, so you just have 3 contributions. That's all you do. You didn't start when you were 20, you didn't start when you were 30. This is all you can do is you put in 7,000 once, and then after a year you put in another 7,000, and then a year later you put another 7,000. So that's just 3 times. And you get 7% per month using this very safe strategy. What will you have at the end of 3 years? This is the chart. This is it. Now here's what I want you to notice about this chart. Number one, it goes up pretty darn steeply. But here you put in $7,000 right at the very beginning. And this is assuming you have no other money. You have no other trading account. You don't have any retirement accounts. You don't have anything. You've been having a pretty good time. Wine, women, and song, and what do you know? You don't have any money. But you do. You can get your hands on $7,000, so you do this. Well, look at this. Look at this, how slow it is the first year. Oh, just a gradual buildup. But you know what? You're learning. You're trading this every week, every couple of weeks. You're getting really good at it. You're watching your account build. You're growing your confidence. You're seeing it build up. It's pretty cool. And so at the end of your first year, you decide, this is pretty neat. I'm going to put another 7,000 into my Roth. And, it's amazing the amount of money people can come up with when they really want to do something. I mean, they're buying cars for $30,000 and $40,000. They're buying $50,000 pickup trucks. But you don't want to do any of that. You just want to put $7,000 in your Roth. So you see this really nice jump right here. We'll see what happens the second year. Because you're dealing with a larger amount of money, you have a steeper increase. So now you're getting pretty excited because your money is grown to $50,000. And all you put in is 7 and 7. All you put in is 14,000. And now you've got $50,000. So you go, I'm going to put in another 7,000. Because now you're a believer. Now you're seeing this money show up. You know what happens when there's losses. You know what happens when there's downturns, and you know you can handle it. You know the strategy can handle it. So you do it one more time, you get this little jump here. Okay, now look at your increase. It's just exponential. And if we went into the fourth year and the fifth year, it'd kind of blow your mind. And that's not what I'm trying to do. What I'm trying to do is show you a very, very realistic plan that you can take advantage of to build up your income and your wealth. Now, after 3 years, you've got $127,885, according just to some very simple math here, according to a very conservative return. And I don't know if that's a lot of money to you or not. I mean, I realize on the West Coast and in the Northeast, people are living in $1 million homes. I know real estate's gone crazy. I know everything's very expensive. I know $127,000 doesn't sound like a lot of money in the context of what a financial advisor says that you need for retirement. I mean, they say you need like $1 million. So this is a fraction of that. But with that amount of money at 7% per month, my goodness, that's $8,952 per month you're bringing in tax-free income. And it just keeps going up from there. So the very next month, you're bringing in $9,000 a month. And if you keep doing this and want to keep doing it, it can just go up from there. And keep in mind, this is under the auspices of the U.S. government. This is a tax law that they passed because retirees and baby boomers are such a huge voting force now, and there's such a huge population. They're not going to get rid of this law. I mean, there would be an absolute revolution. So look at what you can do. And so if you're sitting here right now and you're looking at this graph and you're going, Peter, that's just great. That looks really good, but that's not how things work in the real world. It's just not this perfect 7% increase every single month. And you know what? You're right. I know that's a perfect chart, and things don't work out perfectly every month in the real world. Sometimes you don't make as much. Sometimes you take a step backwards. Sometimes you make more. I mean, we get 30 and 35% returns sometimes on these things in a very short amount of time. So I want you to ask yourself, say it's 5% some months, say it's 10% other months. We're just talking about an average. Say all you can do when you're targeting 25% returns every 2 weeks, or every 10 days. Maybe all you can manage is 7% a month, and maybe that's your average. So what if it even comes close? I mean, what if you're supposed to be getting $9,000 at the end of 3 years and it's $8,000, or even if it's $5,000? The next 3 years are going to go by anyway. And this doesn't take a lot of your time. If you're already really actively trading and you're in there and you're in and out and you're watching all these charts and you're trying to click your mouse at the perfect time and you think that's fun, keep doing it. I've traded that way, and it just turns me into a nervous wreck. When trades are going my way, I'm really happy. When they're going down, I'm really upset and frustrated. And to me, it's almost a really good way to ruin your life. I mean, but I do like doing this. I found my niche here, and the reason I like it is it's not super emotionally taxing. I mean, it's just really a really easy way to trade. It does not take a lot of your attention, and you just have an overwhelming probability of winning. Most of the time you win. And if you haven't, with your trading, if you haven't had a chance yet to see your account build up to some pretty high levels without devastating losses, if you haven't had that experience yet, I really encourage you to give this a try. Like I say, it starts off a little slow in the beginning, but it just builds and builds and builds until you're making an income you can't believe. So there's just one problem with this when you hear about something new. For one thing, you can trade this strategy. You can start out trading with as little as $5,000. You can open an account. I'll help you out with some really good credit spreads that have a really high probability of winning. There's just one problem if you do this on your own, and it's this. If you don't do well right off the bat, you might disregard the whole strategy and quit. And that's what we do as human beings. You go, I tried it. It doesn't work for me. I'm out of here. But that would be a shame, because this really is the best way to trade because of your very high likelihood of winning and the hands-free nature of the trading once you put on a position. So I'm a big believer in this. I'm a huge evangelist. I just think for most people, I know traders, I do live events, I talk to people all the time. Trading can be very frustrating. The market zigs when it's supposed to zag. You did all the research, all the indicators were pointing your way, and you still lost on the trade, and it's just really maddening sometimes. And this gives you so much leeway. It just so stacks the deck in your favor that you don't have to be so good because the strategy's good. So to make sure you start off profitably, it's really important to start off profitably in the beginning and have some good experiences right out of the gate. I put together an educational package, and that's what most people offer here, and I've got a really good one. So this is the best anywhere for this strategy. If you've been curious about spreads, you really want to trade them right, I really cover the bases, including probably the most important component, and that's money management. So I used to sell this for $2,500. I used to speak at international events. I did this on cruise ships. People were happy to get it at this price. They absolutely thought it was magic. They thought it was the coolest thing they'd ever seen. And this was several years ago. This is back in 2007. The market was booming. People had a lot of money to spend. And we could easily get that $2,500. And I even had a deal for a while where I'd sell it for $1,250. And I said, look, you're going to make money on your first several trades. Some of the other $1,250 once you make the money, and I'd get checks. I mean, it was really, really cool. And so here it is. It's called The Winning Secret to More Income More Often, and it includes a lot. And I just want you to know, over, you know, the last 12 years or whatever, I've added a lot to the package. I've added a lot of really good things, like some amazing things, and I'm going to show them to you. And I've dramatically lowered the price. And I'm, like I say, a little evangelical on this for traders, because I know that how tough it is for traders, how tough it is to lose money. And I think you need to make some money, and it would really improve your outlook if you did that. So the first thing you're going to get is how to trade credit spreads for fun and profit. And it's a little webinar I put together. It's just a fun thing, and it shows you step by step how to trade credit spreads, why they work so well, and how they can work for you. Really neat little way to start off. And I've also got, it's really complete. You get a 161-page downloadable ebook, complete with color charts, graphs, everything you need to start trading profitably. You get a 15-chapter video series that you can refer to. You get 14 separate audio files that you can download to your iPod or your MP3. You know, you can listen when you're at the gym. You can listen in your car. They're pretty cool. You also get all the archive webinars we do that you know, you can discover new strategies and ways to improve your returns. And what's really cool about this is you'll have access to all new webinars for life as an owner of this package. So this is a one-time fee. I give you access to it forever, and I keep adding things. I keep improving it. It's a live document. It's not like some book that just sits there on your shelf that's static. This is always improving, but once you get in there, you never have to pay for anything again. You know, this is a one-time deal. So you also get videos that show you how to set up automatic orders with our favorite broker for spread trading to create a hands-free money machine. This is actually my favorite part of this strategy. Our broker is so great, Thinkorswim, and they've got this amazing software. A lot of people don't know how to use it. I just really spell it out very simply. I make these short little videos. I show you exactly what to click on to set up these automatic orders. This is the part of it that really makes this a lifestyle strategy, where you can go do other things. You can go on camping trips, you can go to Europe, you can go to work every day, and you know your trades are being handled, you know, perfectly. So this is the subscription part of it. So you get 2 high probability trades every week. I'll show you exactly where to sell your spreads and exactly how to sell them for the possibility of maximum gains with minimum risk. Now this one is ongoing. You get trades every week. You get updates during the week if you need them. I'll text you on your phone if we need to take action. Usually we don't. This is a pretty laid back strategy, but sometimes you need to, so I'll let you know. And this is $97 a month, and I give you a discount if you want to do a year or whatever, if you want to do more time. And I don't want you to worry about this $97 per month, because the market's going to pay for this, you know, statistically in the first couple of trades for the year, and then you just don't have to worry about that anymore. So I always thought with all of this kind of stuff, the market should pay, and you shouldn't have to if it's really good, if it's really effective. So, but I just want to let you know that there's a charge for that ongoing, but it's worth it. Believe me, you get 8 trades a month. They're all really well researched, and they're just probably going to go in your favor. Plus, as an extra bonus, you'll get a 10-module video course specifically on trading the weeklies. The weeklies are the best thing that ever happened to options since they were invented. And it's really allowed us to take a lot more profits. We really profit. We really use time decay as an edge. And it's the same element of options that loses all the option buyers their money, and it makes us our money. And time decay happens so much quicker when you can pinpoint that perfect spot on the time decay curve. And that's what weekly options allow us to do. So I want to give you a whole course on that. And then preferred brokers. So to make sure you have everything going for you possible, you'll also get a special link to open an account at this best broker in existence for this strategy. And once that account is open, get in touch with us, and we'll get you in touch with our in-house team to get you special commission rates, special lower commissions, unpublished, for traders starting out with just a few contracts. So commissions don't eat up all your profits right in the very beginning. This is huge. This is a big, big advantage. And this is an exclusive for you that we've negotiated over the course of many years. I started off with Tom Sosnoff when he formed the company back around 2000. And even with the TD Ameritrade buying him out, we've got a really good relationship with him, and we'll get you some special treatment. So in addition, we all know the best way to learn is through one-on-one instruction. So included in this package is a free one-on-one online orientation to make sure you get your account set up the right way. You know, filling out the paperwork for an account is super, super important, especially for a Roth to allow you to trade this strategy. You got to check the right boxes and say the right things. We want to walk you through that. And also just all the little ins and outs. It's not real complicated, but you might want to know, you know, when the update comes out, where you can find your resources, and we feel like you need some one-on-one attention for that. So, we have the ability to go right on your computer screen and show you what to click. It's really, really neat. And the reason we do all of this and we go to this extra effort is because we know if you just make 1 or 2 trades, this is the problem, this is the hurdle most people can't get over. Actually subscribing to something is really easy. Clicking on a button and entering your credit card is easy. The hard part is kind of getting started. So we want to give you a little boost there, and we feel that you have a better chance of success with some one-on-one instruction. So I'm going to include that. And this is the really big value added part. We've got advanced trading. We've got some really good coaches. This is actually our head coach. Her name is Alicia, and she graduated in the top of her class in finance. I hired her. She is so freaking bright with numbers, and she's a very good options trader. We knock around strategies all the time. We bounce things off of each other. She's super sharp. I'm really glad to have her on my team. She's our coach. 45-minute sessions. People sign up for 8-session packages, 3-session packages. It's about $395 per session. Once again, that's nothing because you can make so much more money than that. But I'm actually including a session with her with this package. And she's this is where boy, I'll tell you that she really shows you how to wring some serious money out of the markets. And I think you're going to be really impressed with her. And I know I am. So this is a strategy, honestly, I don't think you can afford to miss this. We've added so much. We've added the individual attention. I want you to come on board so we can trade this plan together. Invest what you can, and prove to yourself how well this works, and then watch your account and monthly income grow. For a lot of you that have been training for a while that do the 1 step forward and 2 steps backwards, this is going to be a godsend for you. This is going to be a chance for you to finally watch your account grow. So to get everything we've talked about and to put your feet firmly on the path toward a more generous and secure retirement, go to the ultimateretirementplan.com. And I'm gonna actually tell you what this is. So we've sold it for $2,500. We know for a while we were doing $1,250, and it actually didn't have the individual attention here. So if you go to this page, this is what you're going to see. It's a webinar special. It's for Jeanette's people. We're really thankful to be here and to be able to present to you. It's just $397, and that even includes your first month of the service. I want the market to pay for everything that you spend on this. So I know with 8 trades your first month, you're going to probably make many multiples of your $397, and that's what I want. I want you to start off profitably and stay that way. And I've been trading for over 25 years. This is the best strategy I've ever seen. There's a couple of ins and outs you're going to want to know, and that's what all the education is for. And so I got really only about 2 minutes, but I just did want to answer a couple of questions. I don't actually see too many down here. So if everybody's kind of happy, if people don't have too many questions, I'm just going to wrap it up. I'm going to give you a couple of minutes to go to theultimateretirementplan.com and get started, and I'm really looking forward to having you on board. There's nothing that makes me happier in life than seeing people make money. So I hope you come on board with us. I really want to see inside the site, really want to make some money together. So thanks, Jeanette.
I do see a couple of questions. Can you not see them, Peter?
Oh, wait a second, maybe, here, let me detach this. Oh, I do, yeah, we do have some questions. Let me
You got about 6 minutes, so crank it.
How many minutes do I have?
6.
Oh, not very many, but I'll get going.
Okay.
Thank you for your wonderful presentation. Is it true the IRS requires taxes to be paid on the income generated through a Roth IRA or a certain dollar amount per year? I don't think so. I think any kind of a buildup you have is yours to keep. I think that's the whole idea. What's the minimum to invest to start trading? Like I said, 5,000 is really comfortable. Thinkorswim will open an account for you for $2,000, and you can do that if you want. The other thing you can do is with Thinkorswim, you can have a virtual account. They give you $100,000 to trade with. You can trade this and see how it works for you. I think you're going to be pretty happy. Does Thinkorswim require level 3 clearance? No, level 3 is, I think, selling naked. We're covered on everything. This is one of the reasons it's so safe is we always have a hedge. So they'll let you do it in a Roth, especially if you fill out the forms the right way. And like I say, we'll show you how to do this. I'm confused. Do we find our own credit spreads or do you send out trade alerts? I send out, I do my whole update every Tuesday night. Comes out kind of late because it takes me about 10 hours to do it. I really do a lot of research, but those trades are available to you before the market opens on Wednesday morning. And I tell you exactly what to do. I don't leave anything to chance. I tell you where to get in, where to get out, exactly what to ask for. I provide everything for you. How long does this take to learn? It depends. I've explained it to friends where they get it like pretty quickly. If you've done a little bit of trading, one of the things that I do is I try and make kind of complex things simple, and I think I'm pretty good at that. So I don't think this is going to take very long. I think you could place your first trade within a week and probably do pretty well. I had an emergency during this presentation. Will this replay? Jeanette, is there going to be a replay on this? Jeanette is not listening to me.
Yeah, I am listening. Patience. I had to grab the thing and open it up. Yes, yeah, there'll be a recording. It'll be on TradeThirsty's website, and we'll send an email out at some point to all the regs and let them know that it's available. But they can always just check back at the events part on TradeThirsty.com and probably be up, I'd say, by Monday afternoon, Tuesday morning.
Oh, okay, that sounds good. Thank you. And Scott J asked, no, this is I love these kind of hard questions, the tough questions because they're my favorite. So how many losing months have you had with the Roth account over the last 5 years, and what's the percent of the largest loss? And the largest loss that we can really get on this strategy is about 40 or 50% because of the stops that we place. So, you can usually make that back in about 2 trades. So that's kind of the math. That's how it works, and that's actually how it's actually worked in the real world. In terms of losing months, I might have, sometimes the market goes really crazy. Sometimes our best software, I use some pretty good software to determine market direction. But sometimes, big surprises. So we might have 2 losing months a year. The important thing is we've never had a losing year. It's just the probabilities are so stacked in your favor. If you just follow the rules, this is the best thing I've ever seen in trading. And I know there's some sophisticated stuff. You're going to listen to some great, really, really smart people today, and they are really compelling. I mean, I don't want to take anything away from anybody. I'm just saying that with the probabilities so far in your favor, it is very difficult to screw this up. What effect does flash crashes or big gaps? Hard to set up a stop on an option spread. Yeah, if you get a gap past your entire spread, yeah, you're going to lose the maximum. But that doesn't happen. We can usually see that coming, and we're usually out of the trade before that happens. And as scary as flash crashes are, we haven't had too many of those in the market. I think we had a big one back in 2010, and then they put in a bunch of circuit breakers and things to try and prevent that from ever happening again. Not really an options trader. Do you have lessons on options trading and credit spreads? Yes, I do. I mean, that's the whole package doesn't assume you know anything. I kind of start off from the basics, and I present information the way I would have it presented to me. I don't use a ton of big words. I show you a lot of illustrations. I try and make it simple. And then even after looking at that, if you still don't get it, I've got people on my staff that's what they're here for, is to walk you through stuff. That's what the orientation is for, and that's what the coaching session is for. Do you have to have a Roth open for a minimum of 5 years before you can take any payments? Yes, that's one of the rules. But you can use those 5 years to build up a lot of income. All good. A lot of good comments here. Thank you so much, you guys. I just believe for most of us, I mean, if you're a genius and you're really good with your mouse and you've been able to make a fortune in the market, actively trading, my hat is off to you. I have nothing but respect for you. But for the rest of us that really kind of need a helping hand, this is the best strategy I've ever seen. It just makes things easy. So Jeanette, thanks again for having me. I hope you come on board with me. Give it a shot. I think you'll definitely think you're getting your money's worth, and I want to make some money together.